Hello, hello, team. Welcome to the trading trail. Let's go ahead and start recapping some of our trades. We have another fantastic green day for us. Nice green, $488.41. Very happy with the day. Certainly could have been more. Gave away a good amount of profit today. Probably gave back about $300 of profit today. Definitely not the happiest about that. But regardless, we had an amazing start to the day. Now, waking up and looking at the top gainer list, man, oh man, was it slow. I mean, there were only like three different stocks with enough volume for even an argument to trade them. Now, at the same time, this was also when SNYR was setting up. And as you can see, that is my trade of the day. This one gave us a nice, clean 100% move on our first trade. So I got a really nice adrenaline pump on SNYR. But unfortunately, that adrenaline pump probably made me attack a few setups a little bit too early because I was really looking for that attention to flow into those next few stocks and those next few setups that were setting up when SNYR was starting to sell off. Unfortunately, we didn't get the same follow through that we had on SNYR. Hopefully, that's different for tomorrow. Normally, you can see some momentum kind of follow into the next day. I really hope this market continues to heat up the way it's doing right now. Now, regardless, it's very slow and difficult to trade. Now, let's go ahead and start recapping SNYR because, man, oh man, was it an amazing move. And I think I traded the momentum very well. So let's go ahead and get right into this. This is SNYR. And if we zoom in here, I'm going to go ahead and point out these two areas right here. This allows us to get our first downtrend in. This downtrend is what we're looking for the key break of these areas. Notice how price is finding resistance all within this area. So let's go ahead and highlight all of these areas. So we know that there's going to be some pretty big resistance here, right at that 284. So right here, I'm looking for a break and hold above the 284. We get a really nice break, a hold of the 284. It's holding the 284 very nicely. It's also holding around the 10 EMA on the 1, wicking down to the 25 on the 1. But at the same time, we know if it's holding in this area, what does that mean for the downtrend? It's breaking above and holding above the downtrend. So all of these are perfect entries in my opinion. So my first entry is kind of when it's back down, when price is coming back down, testing that 284. I didn't actually. I think I would have liked to have some shares on that first initial break of the 284, but I think waiting on the retest of that 284 was pretty safe. And then I was also getting some more when I saw that when I saw bids start to step up on the 10 on the 1. So when I saw the tape start to accelerate here, I'm adding to my position. Now, at the same time, notice how I have this second downtrend. So this line right here is the second downtrend. The break of that second downtrend is, in my eyes, the confirmation that we're holding in a strong way above the first downtrend. So if this downtrend right here is the first downtrend, the break of the second is the confirmation that we're holding above the first, because we're getting that nice pullback right after it. That pullback, and then we're continuing on higher. So that's what gave me the conviction here to get in on this break right here. So I'm adding a few more shares, probably bringing up my average just a little bit. So I think at this point, I probably had like a 286 average. And then on that first impulse higher, I'm taking some off the top. I think I sold 10% here, then I'm taking 50% off right about here. And then also I'm kind of trimming out when I see that we're about to fail the 10 on the 1. Notice that we're still holding above the 25 on the 1. If we started to fail the 25 on the 1, at this time my average is still down here and the 10 on the 5 hadn't climbed up close to my average yet. So I probably would have cut the entire position if the 25 on the 1 would have failed here. Fortunately, 25 on the 1 holds up. So that also means that the 10 EMA on the 5 is holding in a strong way. So we get this nice extension up here, and then notice this. From this high, I'm able to make this nice downtrend. And then, at the same time, I did try and add a few shares right here because I thought we were going to get that next parabolic move higher, holding the 10 on the 1. This entry might have been a little bit too aggressive in hindsight. But I still think it was pretty good because I'm looking for that breakthrough 334, move to 350 area. And I thought we were actually going to go right here. We don't do that. So then I'm quickly taking some risk off the table when I see that we're about to fail the 10 on the 1. So I'm trimming out of my position right here because, again, my average was down here. I added right here, brought it up a little bit. So here I'm thinking if the 10-1 fails, that's just going to show room to the 10 on the 5 because the 10 on the 5 climbed up right to that 316 area. Now, one other thing that I'm paying attention to is kind of how the overall movement so far. So we get the nice break of the 284, hold above the 284. Then we get the break of the 3, then 316, and then we're holding in this area. So then I'm thinking if we can get the get hold above this area, that's going to show room to that next area, which is kind of that 345, 350 area. So we got half that move up to 345. I was kind of thinking we were going to test 350. That's why I add right here. And then right when I see that we don't test at 350 and we're finding a lot of resistance here, that's when I'm like, okay, that's going to show room back to this previous low, which is around that 316 level. So depending on where my average is, I'm making sure that I kind of scale out with profits right there. Then once I also see this downtrend form, puts in this nice downtrend, once I start to see some accelerating tape movement and I saw the bids start to step up, I get back in on this downtrend, bigger size. Because I know that if I'm able to find a nice scalp entry right here, then, like, let's say I didn't already have a position. If I didn't already have a position, that means my normal stop loss in this case would probably be this previous low. So the previous low was here, that's why I risked off right here. Right when we started to curl back up, then I can move my stop loss right to this area. When my stop loss moves to right here, that is my confirmation that if I go in with some pretty bigger size, a little bit bigger size, the only reason I'm going in with big size is because I already had a position. If you don't already have a position, this is still somewhat of a risky entry to take on that extension right there. Now, I was confident enough to go in with some bigger size because I still had my average down at the 3 area. So if I go in with bigger size, I can add above my 10, 15, to my 15% area, and that's only going to slightly bring up my average because I still have some shares on the table. So I'm adding in right here, and then now my stop loss is going to be this red area, and my average is still below it, even with adding in big right here, because I didn't want to bring up my average so much. So no matter what, in order to see this move that I want to see, in my eyes, this area is exactly what needed to hold up, which is exactly where my stop loss is. So as long as my stop loss, which is also above my average here, this should be a winning trade no matter what. Yes, I'm going in big by possibly giving away some profits in this area, but if we get the move that I want to see, it's going to be a bigger winning trade for me. And that's exactly what happens. I'm very, very happy with this ad right here. Matter of fact, I think I could have added more. Like I only went in with like a quarter of my position normally. On this one, and I think I could have added more to bring up my average just a little bit because I think my average was down here at VWAP. I could have added a little bit more, brought it up closer to the stop loss. But again, it was moving very quick, so we get the nice break of the 350, hold above the 350. Then it's just key levels all the way up. Break of 350 can show room to 3.7, 375, 4. Break of 4 shows room to 425, and it's just kind of psychological ways all the levels all the way up. Now, all of these red areas are areas where I'm doing trimming. So when price is extending very heavily from the 10 EMA on the 1, again, that's this red line. When price extends, I'm taking some profit off the table. Then, when price gets slammed right back below that 425, I'm making sure that I'm keeping it tight above that 4 level. I know that in order to see any more movement, we have to hold very well above this 4 area. Now, at this point in time, we're still far extended from the 10 on the 1. So when I see that we're not able to immediately break back that through that 425, I'm taking some more profit off the table. Just because the more that we kind of chop around in this area, it's more likely that we're going to fail the 10 on the 1 and fail that 4 area. So I was like, you know what? Let's take some profit off the table right here. And then as I see that price is coming back down, holding that 10 on the 1, this was such a big move that, again, my average is down here. So I was thinking maybe if I can try and look for a break through this 425. I was actually ballsy enough to take some shares on right here. So I'm adding as I see we're about to break out through that 425. The idea of this breakthrough 425 is that we actually have this wick, this green wick right here. So I'm thinking if we break 425, that's going to at least show room to the top of that wick, which in this case is probably around like, what is that, 450? So I was thinking we break here, show some room to that next area, and this is enough breathing room if it was a normal trade to at least escape with some profits normally, even though it's extended from the 10 on the 5. So I was thinking when I start to see price accelerate off of that 10 EMA on the 1, that's what gave me the confidence to go in again. So this is my third ad at this point, bringing my average up. So I went in again, and then this move was so quick, I'm immediately scaling out. So when price extends so much from the 10 on the 1, scale out every single time. Price extends, don't really scale out because I did so much trimming right here. I thought we were going to slam back down, honestly. But price holds on the 10-1, and then once again we extend, and then I'm selling some shares up here. Right when price comes down, fails the 10-1, fails right through the 10-1, and then fails the 10 on the 25 EMA on the 1. That's my kind of confirmation to get out quick. So I'm closing my position right about there. So that is the biggest trade in a while. This one netted me a nice, I think, unrealized at one point. I was up $800 in this trade. Now I did kind of give away some within here. Gave away about I think it was like $200. But wow, oh wow, this gave a nice adrenaline rush on that first trade of the day, because this was my first entry here at 5 in the morning. 5:20 in the morning. This was my first entry on the day, and boom, I mean, it rocket shipped. Now, in hindsight, sure, you're probably like thinking to yourself, well, why didn't you just go in heavy right there? Like, if you saw the room, why don't you just go in heavy? Because I probably rotated through about 10 grand in funds. Okay, let's just say I rotated through 10 grand of funds. If I rotate through 10 grand of funds and my average risk per trade is like 5 to 8%, do I want to take on a full 5 to 8%, 5 to 8% of risk with one entry? Absolutely not. Down here, I'm taking 5 to 8% with much smaller size. So doing it like this, I'm much minimizing my average losing trade because I can add to the winners. You don't want to be adding to the losers. Okay. And if you take on too much risk right away, because it's like, yes, this is a safe entry. Yes, it's a fantastic entry, but do I want to take on so much risk so fast? I would rather create enough breathing room in order for me to go in with some larger funds. And that's exactly how I was able to manage this trade, because I got equivalently the same amount of profit out of that trade with a little bit less risk. And that's how I look at it. Now, again, hindsight 2020. Yeah, if you just go in with your max position size down here, and then just hold everything up here, but it's like that's a little unrealistic in my opinion. So I would rather go in small on that first entry, and then as it's showing more continued signs of strength and consolidating, I'll find those key areas to add, because that gives me the breathing room to go in with that larger position size. Going in immediately on that first entry with your max position size is really risky. And I personally, I just don't want to take that amount of risk on something like this. Now the next trade was on MTVA, so this was right after 7 a.m. And if you notice, this one into 7 a.m. started selling back off. So 7 a.m. was right about here. Wasn't really setting up in the cleanest way for those 7 a.m. bulls because I had failed the 10 on the 5. Um, so right after this, I'm thinking, we're starting to sell off here. What are the chances that we see this momentum go to the next stock? And the next one to set up was on MTVA. In hindsight 2020, of course, I think I should have been a little bit more skeptical of this one because the daily chart is not the best looking. Um, and now the reason that I say that is because it was already up of the, around that 2.5 area. So like, let's just break down this daily chart. This is the daily chart. So we have this key level. So we have a 2.5, 275. Then the we also have the key 200 EMA on the one. What is going on? We also have the key 200 EMA on the daily chart. So we have 250, and what this daily chart is showing us is that a break of this 250 will only show room to the 275. So yes, that's 25 cents, but if we look and drill into the 1 minute chart, this is where it gets risky. Because if you're attacking this 2.5 too early, look at how far extended we are from that 10 EMA on the 5. So you could take on, 12% risk on a trade like this. So it's like setups like this where like I kind of want to be treating that with some smaller size, because when it's starting to set up for those larger key level breaks, I'll find that better entry for me to go in with that bigger size, and I already have a green cushion on that trade, so that's enough breathing room to really go in and go in with that larger position. This There's no breathing room right here. No breathing room. Even if it came back up and then started moving and breaking 2.5, 275, there's no breathing room in here. So it's very risky to kind of like average down and kind of um, just let it move sideways and kind of hope that you're going to get that move back up to the 2.5. Now, another thing, this 2.5, yes, it kind of looked like it was going to be some really nice resistance right here. So, like, that's why I decided to kind of attack this green candle right here. Unfortunately, we immediately slammed back down, and I should have just gotten out immediately. Quite honestly, I should have gotten out immediately. My thought process, though, was if we're able to, like, chop around and hold above VWAP, we can probably see a move like that, which was kind of interesting. But price would have had to hold above VWAP, and then right when I see it like failing the VWAP, I'm closing the position. Of course, price gets right back above VWAP, and I'm like, okay, time to get back in. Because I was thinking, again, we get the hold of VWAP and the move higher. It's not exactly what happens. This is front side trading. I want to be on the right side of the V. So, the best way to kind of describe it is like if you look at a V right here, your entry wants to be right here, and your stop loss right at the bottom right there. That's normally going to be a better entry than trying to time the bottom right here. And what I was kind of trying to do is I was like buying and hoping that a key support holds. What I should be doing is waiting for the key support to hold and then getting in. So, like, just because it wicked off of this 25 on the one, I don't think that's enough conviction for me to enter back in. What is going on? Enter back in on the break of VWAP. I don't think that's enough conviction. So I think I should have absolutely waited until I saw it hold above a key level, or at least come back down, test the 10 EMA on the 5, and then look for an entry. Because, like, you see this movement right here where price comes up, chops around, comes up above the VWAP, then immediately put in this nice little downtrend. If price were to have held above the VWAP, then I could have just looked for entries right here. So it's like, why do I want to get chopped around when it's like, I know I'm going to be able to find a better entry, which, like, let's say that theoretical better entry would have been like right about here. If price would have held above VWAP, and then like that would have this beautiful entry. This horrible entry. I mean, this is not. This is front side trading. Like all of these are kind of scalping setups, and it's like, I was feeling happy on the day. I had a cushion on the day, so I was like, let me start pushing my position size. So I start trading with some like larger position sizes, and definitely not what you want to do. So MTVA, unfortunately, a losing trade for me, but uh, definitely a good learning opportunity, because like when you see a daily chart like this, like, yeah, if you go to a weekly chart, it is showing a little bit more room to run, but like the 2.5 and the 275, very important key levels to focus on, and we had them charted out ahead of time. So since we knew that 275 was going to be that larger resistance, we want to see a nice consolidated setup for that 2.5 and then the 275 break. Now, in a hotter market, sure, maybe it's still there's still an argument to take that 2.5 early, But my favorite setups are when they kind of move, consolidate on that key support. You're not buying when buying and then hoping it holds. What you really want to be doing is just waiting for it to hold and then getting in. So, unfortunately, probably attacked MTVA a little bit too early, but there was one other opportunity that was interesting. That was SBEV. This was proven to be a pretty good-looking daily chart, in my opinion, because we started gapping up, and then in pre-market we were testing this key area right here, this 302. And then if you notice what this is a beautiful gap fill. So this gap fill shows room all the way up to like that 4.6 area. So that's kind of what I was looking for. Now, if we go into SBEV, we saw it getting some attention into 7 in the morning. And this one was really nice. So we had this downtrend. And then we also had this 5-minute this downtrend on the 5-minute chart placed on the top of the candles right here. So I knew that we had this nice downtrend on the 5-minute chart. So I was actually kind of expecting us to find some resistance right here. What I really, really wanted to see was price come up, pull back just a little bit, and then with 7 a.m. volume explode through that downtrend. Because all of this would be some stronger green candle movement up to this like prime downtrend. This prime downtrend. So this prime downtrend, I was thinking a strong break of that is what's going to start setting us up for the move to this like pre-market high. And then I was also thinking, that's what's going to get us into that gap. And the gap starts at 303. And then we also had that 315 resistance from back in here. So I also had that charted. So let's go to this a 1-minute chart here, and then we can start breaking it down. So we start to see that that strong green candle movement. This is the downtrend on that 5-minute chart. This one, notice how we got the break above that downtrend, but no 5-minute candles were able to close up here, and we never consolidated. I was really hoping that if price were to have held in this area with 7 a.m. volume, we're rocket shipping at 701. That's kind of what I was expecting to have happen. It's unfortunate that this one didn't play out so nicely. But if you also notice, we had this kind of resistance right here that lines up with our 285. So that my entry was actually at the 285 break. And then the simple idea here is enter entries in this area. Do not want to get caught holding below VWAP, especially when price is so far extended from the 10 EMA on the 5. Price is so far extended from all of these kind of like recent supports down here that if I get caught holding below the VWAP level, it's going to be a very bad day for me. It's going to be a bad day for my P&L. So I'm getting in right around here and then not going to get caught holding below VWAP here. As simple as that. And then we still get that rocket ship up with momentum into 7 a.m. So this is like 6:59 going into 7 a.m. And I was really hoping that if price breaks and holds above this 5-minute downtrend, that's what's going to start that next leg up. Unfortunately, that 7 a.m. volume was selling volume, and that's when we start to reject all of these key levels. But into 7 a.m., I'm making sure I take some profit off the table. And without this trimming of my position, if I didn't do this trimming right here, that means I would have been cutting. Like I sold on this candle right here when price failed VWAP. If I didn't take that profit off the table, this would have been a very, very bad losing trade for me. Now, unrealized, I was up about $200 on this trade. I gave back about $175 on this one because one, I wasn't quick enough to sell at a good area. Now, at the same time, I'm very thankful that I was able to do some trimming up here. Without that trimming, it would have been a much, much worse trade. But regardless, that's been the recap so far. There was one missed opportunity on MURA. This was a fantastic trade. And we can go over this one very quickly. I did paper trade this one, but this is the daily chart on this one. And as you can see, we have a beautiful, beautiful gap fill from this key level all the way up to a 322 key area. I mean, what a beautiful gap. And if we go into this 1 minute chart here. This is quite beautiful. So we have it come up, find that resistance, price comes back down. What we're going to first do, in my opinion, there's about 4 different entries on this one. And so like we have about one entry right there, we have a possible entry right there, and then you also might have like another entry when we get the break and hold a VWAP up there. And arguably, if you were like fast enough, maybe you could have scalped some entries back in there on those pullbacks. But there's 3 different entries here. Which one's the safest? Okay. Because it's like, sure, yeah, I mean, yeah, it would have been great to grab some shares on some of those pullbacks, but it's so far extended from the 10 on the 5. Is that the best looking setup? I mean, sure, if you got some shares in right there and you were able to hold, I mean, God, that would have been a fantastic P&L, right? But are those the safest? Arguably, not really. You also have the 189 break, which is a little bit better because prices, consolidating, moving sideways a little bit. You have somewhat of a downtrend right here, but is that the safest? Maybe not. Now, what about this one? Price moves up, back down, moves back up, finds that resistance, then starts to move sideways. Then if you notice, this 50 line right here, this purple line, is a 50 EMA on the 1. That is what really makes this entry the safest, because this also lines up with the 10 EMA on the 5. And price is just moving sideways above this area for what? An hour and a half? It's holding support above the 10 EMA on the 5 for an hour and a half into market open. Then you also have a beautiful downtrend formed from right here. So this is a beautiful entry. Multiple different convictions to take this 222, this 220 key break area. Mainly because you have this resistance right here, and then you also know that that's kind of what's going to get you into that gap. You're looking at 189, so you're looking for the 220 break, which is going to kind of you're looking for the break of 220 to help finish this gap all the way up to 322. And man, oh man, so it's like, you know what? You take an entry right here. How much are you risking? Maybe 2-3%, because like, let's say you cut on the fail of that previous low, or you can just simply cut at the fail of the 10 EMA at the support of the downtrend, which would be right about there. So you get that nice break above. So just don't get caught holding below the downtrend. And man, that was a beautiful entry. I mean, this was a beautiful trade. You immediately get that reaction, that strong green candle movement up to the downtrend, and then the break above the downtrend, and then price starts to get that larger move. Now we know that we're going to find some resistance up in here, so do some trimming around here. Price is still moving sideways. Then there's an argument you possibly could have kept holding shares throughout this entire area. Mainly because this is a previous low, then another previous low, so price comes up, moves sideways, fails this area, but it's still kind of holding support on our EMAs, so then you might look to that previous low. Just don't get caught holding below the 90 EMA on that 1 minute chart. So all within this area, there's an argument to still be holding shares from that 220 area. So hold some shares within here. Again, make sure you do some trimming in this area, lighten that position up a little bit, and then price starts to move sideways on our key EMAs. Then we get a break and hold a VWAP, and then you also have this nice downtrend formed right here. So you get the break, hold above VWAP, and then I would personally be entering in right there for that next entry. I mean, you could have played this one all day long, it looked like. Now, that's not a reason to stick around longer than you should, but definitely could have kept focus on this one a little bit longer. MURA was a pretty good looking chart. Now, this one does end up failing out, but again, this is the real action that you want to be a part of. This action right here was absolutely beautiful. And then on that, when price holds the 25 on the 1, you can just simply close your position up here. That's a fantastic trade. Fantastic trade. Sell 50% right here, price comes back down, hold support, and then boom, close that position. Wow, what a beautiful trade. What a beautiful trade. But that's been my recap today, guys. If you guys have any questions, feel free to drop a comment, like, subscribe, you know the drill. But to anyone new to my channel, feel free to check out the link in the description. That's where I do all of my trading. I trade along Sensei. He is the true master. But regardless, that's been the Trading Trail recap. If you guys have any questions, comments, concerns, feel free to reach out. Safe trading, everyone. Bye.